Hello and thank you for tuning into my YouTube channel. This is Mr. E Loans, your mortgage professor. In this video I will explain how easy it is to calculate a payment on a $100,000 home loan. The first thing you will need to do is locate a mortgage calculator. You can use our free mortgage calculator by going to www.mreloans.com. I have also left a link in the description of this video that will take you directly to the mortgage calculator on mreloans.com. If you go to our website, you will see the button for the mortgage calculator located on the menu bar. Select the mortgage calculator button. You will be directed to our free online calculator. Next you will need to input $100,000 into the first section that states loan amount. If your loan amount is not exactly $100,000, then input the exact amount that you plan to borrow instead. The mortgage calculator will ask you for the amount of money you will be using as a down payment for your loan. Most banks typically want borrowers to put down 10 to 20%. For specifics, contact the bank that you will be receiving your loan from, or the loan officer that is assisting you with your new mortgage. If you are refinancing your loan, you can put a 0 in this box, unless you need to bring money to closing because 1. You do not have enough equity in your home, 2. You would like to put money down on a refinance to lower your monthly payment. The term of the loan is the next input you will select. Term of a loan means how many years the loan will be for. Our calculator is set up in years. Most mortgage loans are written for 30 years. If you want a loan with different terms, you will need to input the number of years into this section instead. After that, input the interest rate you think that you will qualify for. In this video, I will use the United States national average for the week of June 20th, 2014. Next you will need to input your escrow in pounds, which are your taxes and insurance. Our calculator asks for your taxes and insurance in yearly sums. Input your expected annual tax amount. If you do not know this number, sometimes it can be found on Zillow.com. In order to find this amount on Zillow, you would need to know the address of the proposed home you are planning to purchase. If you do not have an address, you can multiply the home's estimated value or appraised value by 1.2% on average. This is only an estimate as tax rates vary from county to county. After inputting the annual taxes into the calculator, you will need to enter the yearly insurance premium amount. If you do not have an address, this is something you will need to estimate. In this video I will use the estimated amount of $1,200. Additionally, if your new or existing home is in a flood zone, you will need to calculate this extra policy amount too. If your loan requires mortgage insurance, you can input that information here. PMI stands for Private Mortgage Insurance. This is required on most loans when the loan exceeds 80% of a home's appraised value. Additionally, most FHA loans also require MI, which is mortgage insurance. If you are unsure of what your monthly PMI rate is, use the estimated default that we have input into the calculator already. If your loan does not require private mortgage insurance, be sure to input 0 here. Lastly, you will need to select when your estimated first payment will take place. This date is not important if you quickly want to know what your estimated payment will be. If you want to analyze the loan's amortization, then the first payment date will be very important. Once everything has been input to your liking, hit the calculate button and you will get an estimated monthly payment for a $100,000 loan. Hopefully this information has helped you. If you have additional questions, please visit www.mreloans.com and be sure to leave a like on this video.